Welcome back to Upside Down Data. We need to talk about Chainlink. Link has been hit hard just like the rest of the market. If we just go ahead and measure this drawdown from the local high here, we're down about 25%, which feels pretty brutal. But looking at history, we'll see that this is not at all unexpected in a bull market. In a minute, I want to talk about why this was especially not unexpected at this particular moment. But let's just look at history here. So I'm not even going to count this earlier part of the cycle, anything before March of 2020, because that was before crypto really went on its full-on bull market. We're just going to talk here more when crypto really started to get into that really bullish footing. You'll see 63% drawdown, 46% drawdown, 32, 28, 21, 42, 32% drawdowns in the prior cycle, in the prior bull market. And when you look at this, I'm just going to remove these drawings here. When we look at it in retrospect, we generally just see this very nice uptrend with a little bit of volatility, but we don't think about the massive amount of pain that people suffered through during this time. Imagine a 60% drawdown from current levels. Imagine the panic that would happen if we saw that. 25% would look like nothing. But that is what happened, and we got multiple of those big drawdowns that were bigger than what we've seen here. So from a historical perspective then, 25% drawdown is relatively mild, and in fact, it would not be shocking to see us fall further from here. But it doesn't mean that the bull market has to be over just from that alone. It can feel like that, and oftentimes it will go until it really does genuinely feel like the run is over, just for it to reverse back to the upside. So in the moment, it's always tough. It always feels difficult to stomach, but it is normal. So I do just want to make that point first off. Now I want to talk about what some of our models are seeing and why this really was a moment where a correction for Link was quite likely. So let's go ahead and get into that. But first, if you'd like to see live data from our models and more, you can go over to our website, polaritydigital.io. And if you sign up for our Polarity Digital Pro plan, you'll get access to all of our different models for Link and other assets, as well as the on-chain data that we have for Chainlink and others. So go ahead and check that out if you're interested. Link is in the description. So let's start with our short-term upside downside potential indicator, or UDPI. So if you follow the channel, you're very familiar with this. One of our risk models, high values mean high risk, low values mean low risk. And the model cares about moves that play out over days to weeks, so short term in its time horizon. And you see it does a very good job of identifying these points when Link is getting overheated in those short-term timeframes, as well as these low-risk points, these better accumulation points. So you'll see what happened more recently is we went on this big run with Link, getting up to around $30. Short-term UDPI rocketed to the upside. It actually hit the top of the scale, suggesting that in the short term, Link was very overheated. Risk was high, or more specifically, the upside potential was quite low, downside potential was quite high, and that's a point where pullbacks oftentimes will form. And that's exactly what we're seeing so far. And this is actually a good thing. When you look at the prior bull market, for example, it's a good thing when risk cools off, because that sets the stage for that next leg up. You'd much rather rally out of low risk levels versus high. Every time you get to these high levels, Link has to slow down or correct, let risk cool off before that next push up can happen. So very possible we're just going to see the same thing happen here again. We're going to see Link correct, move sideways, some kind of combination of those, risk cool off, but then that could then set the stage for that next leg up. So it's very likely we'll need to see risk fall further, but the further it falls, the more room that Link will have to work with in the next rally. So this is ultimately a good thing, though of course in the short term it doesn't feel like that, especially thinking about the possibility that Link might need to retest some lower prices. It always just feels better when it's just going straight up, but this is the way that markets work. They don't go straight up. You have to be able to stomach the volatility if you want to actually end up realizing the full move. So not financial advice. You should make of these data as you will, but it is the case that we were in a position where some cooling off was needed. So once we have cooled off a bit, how will we know when the next leg up might be likely? Again, assuming the bull market's still on, which remains my base case. Well, a model that we have that's very useful for this is our Trend Confidence Indicator, or TCI. Again, this is available on our website, polaritydigital.io, link in the description. So this model, you want to look at how it's moving relative to price. When you see it start moving up aggressively, price tends to follow. And then when you see it moving down aggressively, price tends to stall, either stop, go sideways, or correct. And then it starts moving up again, price goes up, moves down aggressively, then price will follow after that, so on and so forth. These divergences that happen can act as very good leading indicators of these shifts in the short-term trend of Link. And you'll see, even going into this rally here, very clearly started moving back up aggressively, started this uptrend back to the upside. But then, even before we saw this sell-off, we already saw this bearish divergence. We saw the TCI moving down as price continued moving up, and now we're realizing that bearish divergence, Link is falling. There were already signs that this trend was weakening before we even got the FOMC meeting. That was just the catalyst to kick it off. Conditions were already there. And this, in conjunction with the really high risk levels we were seeing, suggested that some kind of a cooling off event was likely. I actually was posting on X about this, that risk was really high. It just needed a spark for a correction to happen. That is what we've seen. And the TCI was also warning of the same thing. Now, importantly, whenever we see this TCI start moving up aggressively off of this, that could be that sign we're looking for that the next leg up could be happening. And especially if we see that happen after risk has cooled off quite a bit, that could be a very nice signal that it's time to start getting bullish. I mean, if we just look back here, this was August, early August of 24 when we saw this start to happen. Just look at where risk was back in August of 2024. I mean, it was low. It was way down here. Super low risk. So you had this super nice confluence between the models. Very low risk. And also then you saw a very aggressive rebound on the TCI. That was a great sign, suggesting that that was probably a good acquisition and some rally might be coming after it. Likewise, very high risk, bearish moves on the TCI, very clear signal that bad things might be coming, corrections, consolidation, all that. Now we might look for the same thing again. When does risk get into a better spot and then we see the TCI move up aggressively? That might be that sign that we're waiting for. Certainly something I will be keeping my eye on. So then the final model I want to talk about, zooming out a little bit more to the medium/long term, is our forecast model. So this one does is it gives you the probability of upside 6 months in the future. That's what it's giving you here. So for example, 0.96 would say 96% chance the price of Link will be above where it is right now 6 months in the future. For all the way down here at 0.8, that's only an 8% chance of upside in 6 months. So you'll notice that coming out of the bottom, we got really bullish here, just clearly very bullish. And I was talking about this a lot at the time, that this was a great signal for Link that we were likely to be seeing a move back up, a continuation or a resumption of a bullish trend after that really nasty bear market that we had experienced. Now, going into this rally, we did see it start to move down a bit. It did briefly fall below 0.5, but only for a day, then it bounced back up. So still remained bullish, just not quite as bullish. But now after that happened, and now as we're seeing this correction here, it's starting to get more bullish again. So that's where, when we look at this, it still suggests that a bullish outlook on Link makes sense, at least in that kind of time horizon, in the next 6 months or so. Which makes sense. If we're going into a full-on alt season, you'd probably expect that to be happening sometime in early to mid next year. And so this is just some possible confluence with that general time frame. But what it doesn't suggest is that we're in the middle of some full-on bear market like we were here, for example, in late 2021. Here, we were at a place of euphoria in general across the crypto markets, forecast model telling a very different story. Now here, it's not telling that doom and gloom story yet. So of course, I'm going to keep an eye on it and see if the model remains bullish. Of course, if it flips bearish, then we might have to change our outlook. But for now, a bullish outlook still makes sense from this model's perspective. So when we look across all of the things that we've been talking about here, we talk about the history and just how bull markets work. We haven't seen anything unusual yet in terms of the drawdown. Certainly not this drawdown that we've seen so far. This is quite normal, quite within the realm of expectations. We also saw we were just at a very high risk point. We needed to cool off. We just needed a catalyst to start the process. We got that, and now it's happening. We also talked about how we can watch the TCI to get an idea of when this correction might be done and the new rally might be ready to start. And then we finally talked about how remaining bullish still makes sense when we think about what our forecast model is telling us. So none of this is financial advice, but really there's a lot of panic and fear that can happen when you see these really bloody, nasty days like we have with Link. And certainly when you look on social media, there'll be people who are trying to capitalize on that emotion. They'll start bear posting like crazy. They'll start saying, oh, I don't know, think the cycle's over. Oh, this is really concerning. And then, of course, they'll just flip right back to being bullish the second that price goes back up. I prefer to take a data-driven perspective. I don't want to just look at what influencers are saying on X or on YouTube or anywhere else, because they just tend to follow the emotions. There's no alpha there. There's nothing really to be gained. There's no useful information. I like to look at the data, see what they're telling us. And what we're seeing right now is that everything is in line with what we'd expect to happen, not just from history, but based on what the data, what our models were telling us, of where we were right now in the cycle. But the longer term outlook still remains unchanged. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over at X. A lot of updates for our models and more over there. And also you can go to our website, claritydigital.io, and see live data from our models and more, link in the description.